The time to make money is when a market is trending, uh, preferably trending strongly. um, the problem that many traders have is uh, they don't get on the trend early. They don't really recognize that a strong trend has developed until the trend is already mature, and then they try and uh, once the trend ends and you get a correction, they try and buy too soon. And I'm going to show you some examples here. um, and this also kind of goes along with the concept of regression when price gets stretched too far above or below a long-term mean. One of two things has to happen. It either has to correct, have a severe correction, or price can churn sideways for a long period of time uh, and work off that stretch and allow the moving average time to catch up to price. So um, the problem that many traders have is they get caught either in the severe correction because they're expecting the trend to resume, uh, and and they buy too soon before the correction has run its course, or they get caught in a sideways churn that just eats up a lot of time and is very difficult to make money in. So this is the uranium chart. So this is a good example. I tried to warn people back, right back in here, the end of 21, beginning of 22, that uranium had made a big move and it was going to be stuck in a sideways churn or a severe correction for a while, and that's exactly what's happened here. And I see traders all the time trying to buy uranium because they had the memory of this huge move, and it's just too early. The market is churning sideways. It's allowing this 200-week moving average to catch up to price. Oil stocks, another one of those, or coal stocks, I mean, same thing. People became really infatuated with the coal stocks here at the right as the 3-year cycle in the CRB was topping. And again, same thing. I said, we're going to be either have to correct severely, or we're going to have to go sideways for a long time. Sideways is the more frustrating scenario, and that's what's happening here. This is Peabody Energy, a good example. You can see it's been stuck in this sideways churn for well over a year. I'm same caution in energy stocks. Warned people here they were going to be stuck in a sideways churn for a while, and I don't think this is done. I think you probably got many more months before the energy stocks are ready to take off to the upside again. Oil is a good example. I think I've shown this one before. Just a gigantic move, and this was a classic example of regression. At this bottom here, oil was trading negative. I think it was minus $35. You were getting paid to take oil. Didn't last very long, but that was the most extreme stretch to the downside I have ever seen, and it's what powered this huge move. The problem, of course, is that price got way too far to the upside, and now it needed to correct. And I think this market is probably going to correct not only as this severe correction back down to the 200-week moving average, but I think it's going to be stuck going sideways. And we may waste an entire 3-year cycle of oil just churning sideways, building another base for the next trending move. So people that got really enamored of the energy stocks here because of this move out of this major 3-year cycle low, and they want to go back to that well too soon, they end up getting stuck in this long sideways churn and this severe correction. So that's another market. Actually the stock market, another really good example. Just QE for months and months and months powered this gigantic move, stretched price way too far above the 200-week moving average. It doesn't. This could have gone either way. It could have unfolded as a severe move back down below the 200-week moving average. The problem is that the 4-year cycle low isn't due until out here sometime in 2024. So it looks to me like this is, we're not going to have a crash. I'm seeing, tons of people trying to call it a crash here, but that's not going to happen, not yet. Maybe out here in 24, but I think probably what's likely to unfold is the same thing that's happening in energy and uranium and coal. We're stuck in a sideways churn. We're not in this cyclical bear market anymore, but we're not in a trending phase where you can make a lot of money easy. It's choppy. You get these convincing moves, and about the time you're convinced that it's safe to get back in the water, then you get a big correction, and then another move makes a higher high. Now you feel safe, and then another big correction. Probably the same thing will happen here. We'll make and we made a slightly higher high on Friday. We'll probably come up. Maybe we'll test this pivot, and then we'll have another big correction, and just a difficult market to make money. A market that's churning sideways, not a market that's trending. Trending markets like this are easy to make money. Sideways markets that are working off a regression, working off a huge stretch, those are difficult markets to make money. And I have advised the subscribers to the SMT that the market, I think, that is, it has been trending, and I think will continue to trend, is the metals. They have already put in a long sideways churn here since this top back in mid 2020. So we're almost 3 years into this sideways churn. Now we are, again, I've posted several videos on this, that we're in an intermediate degree correction. But I don't think this intermediate correction is going to unfold as a long sideways frustrating churn. I think it's going to dip back down. It's going to close some of the gap between the high here and this long-term 200-week moving average, work off some of that stretch, and then I think we'll get another trending move, a breakout and a strong trending move. So you've got to understand how markets work. They go through periods where they trend strongly, and then they reach exhaustion. And once exhaustion is reached, you either have a sharp correction that reels in some of the stretch above the mean, and then a resumption of the trend, or very often you get a sideways churn that's just very difficult, volatile back and forth, or you get a combination of both. Oil is a good example of a combination of both. So the job as investors is to try and figure out beforehand where the next trend is going to be, rather than try to jump back on a market that has already been trending strongly and now needs to rest and consolidate for months and months. You don't want to get back into that kind of market. So here was gold. We had this really strong trending move, and then it devolved into this just nightmare back and forth churn, the dip down into the 8-year cycle low, and now this market is set up to trend. And I think this is where we want to focus for the next 2 or 3 years probably. Is in the metals. I think that is where we are most likely to get a strong trending move where you can make money. And of course, that doesn't mean that you're not going to have corrections along the way. This was a very strong trending move here, but you still had an intermediate cycle low here. And intermediate degree decline here. We had one in the crash, the COVID crash. So there are absolutely going to be corrections along the way. Here was one right here, and we're in one right now. But overall, this is the market that, in my opinion, is most likely to trend, where you're not going to be trapped in a volatile back and forth, choppy pattern that's very difficult to make money and very easy to lose money. These are the kind of markets that cause you to overtrade and lose money. Trending markets are the markets where, if you don't time entries perfectly, it's no big deal because the trend is going to rescue your positions. And in my opinion, that is the metals market. We've already put in our time churning sideways for, like I said, almost 3 years. And so this is the market set up to, after this intermediate decline is over, to break out above this triple top and start a very powerful trending move. So this is where you want to focus. Again, not just yet. We've probably got a few more weeks left in this intermediate correction. But once this correction is done, and again, this is another mistake that many traders make. They get frustrated during corrections. Corrections are your opportunities. They are the they create the fuel for the next rally. So this was very frustrating for most people. It got everybody despondent. They didn't want to buy metals, but this was creating the fuel for this trending move here, and it ultimately it's going to create the fuel for the breakout and the strong trending move that's going to occur once the breakout is finished. So this is not the intermediate decline that gold is in right now. This is not something to be panicked about. This is going to create the fuel for the breakout move that's going to start what I think is probably the bubble phase in metals. So a combination of things. Pay attention to markets that are getting stretched above their long-term means. They're ripe for either corrections or sideways churns. Those are the markets you want to avoid. They're hard to make money in. The markets that have already completed these long sideways difficult periods, most of you know the rule. Easy phases follow difficult phases, and difficult phases follow easy phases. So classic example, this was an easy phase followed by a very difficult phase. We're setting up, and actually I think the difficult phase ended here, and I think we are now in an easy phase, and one that still has quite a long time to run yet. So the goal of us as investors and traders is to try and figure out where the next trending move is going to be, and forget about the previous trending move, as it's going to take a while before that's ready again, and get on board, switch gears, get on board the market that's ready to trend. And in my opinion, precious metals are that market, and they're going to be that market for at least the next couple of years.